Hello, everyone. I'm Eva Yazhari, General Partner of Beyond Capital Ventures. Today, I'm going to talk about equity and power in the venture capital industry. With $2.1 billion invested in African startups so far in 2021 alone, this is already outpacing the previous record set in 2020. I want to talk to you all about why and how we should reform venture capital and what we as investors can do about it. But first, just a little bit about my background. I've always been interested in the meaning behind money. I left my career on Wall Street after beginning my career in private equity and hedge funds and graduating with a mathematics degree. When I worked on Wall Street, I was deeply inspired actually by the activist hedge fund managers I worked with to think about how to use more than just money as a tool to create more money, how to use my skills for good. I thought if Bill Ackman, who is a well-known activist, shareholder, investor, could influence companies as a shareholder, couldn't money somehow be used to influence companies to be better stewards of social and environmental issues? But even before these professional pursuits, my childhood was really filled with creative freedom and an emphasis on the power each of us has to contribute beyond ourselves. I'm the only child of parents who are both working artists. They fostered my development through a sense of independence. And they also really set a legacy in place for our family when they told me a lot about how my father's side of the family had lived in Africa for over a decade. My grandfather was a physician who moved his entire family to Tanzania in the 50s and spent much of the 60s returning to the US during the civil rights movement. And what he did there was he opened and operated a health clinic in a rural part of Tanzania, probably semi-urban by now. His desire to use his skills for more than just making money for good taught me that I could too do the same thing in my own distinctive way. So in 2009, I started Beyond Capital Fund. And what we do is we invest in innovative seed stage companies in East Africa and India. So we essentially are an emerging markets diversified fund. The companies are having a deep impact on underserved communities, but they are still scalable, profitable businesses that happen to have impact baked into their models and are run by what we call conscious leaders. And I really do believe that the future of investing is investing in companies where impact is baked into models that are also providing access to need to haves, healthcare, financial inclusion, agriculture tools that some of the individuals on this planet simply lack access to and would be able to improve their lives with access to innovations around those areas. So when I started investing in emerging markets about 12 years ago, it was a very different landscape from today. I think particularly looking for companies where impact was baked into a sustainable and a profitable and a scalable business model was somewhat rare, or at least we had to look deeper. That being said, the industry and ecosystem for startups that are purpose-driven has really grown tremendously. And today, startups in Africa are raising at least 100 million every month. This is a very strong growth number. We are exceeding the 2020 numbers for capital flowing into startups on the continent. I also believe very strongly that macro trends like the prevalence of smartphones, mobile money, where African countries are truly leading the world, show that these are vibrant markets with favorable investment dynamics. And they present a unique opportunity for investors to make money and do good at the same time. And so that's why I think it's really important to take a step back and think about venture capital. I'll tell you a little bit more about our fund, Beyond Capital, where we have the mission to really prove that it's possible to generate market rate returns while improving the quality of life for low-income consumers. Our efforts are centered around East Africa and India because of the growing demand from 1 billion consumers who lack access to basic goods and services, like I mentioned before. We serve as a trusted partner. And so I think this work, as a friend of mine, Patience Marine Ball, who worked at the IFC and was born in Zimbabwe herself, has said, this is not easy work. And the reality is, I think that no investing is truly easy, particularly when you're looking for opportunities that go beyond just financial return. So what we do is we are a trusted partner to these companies. We offer them advice, we offer them support as they grow their businesses. And we share knowledge with them about the markets that we've looked at through our pipeline, coming from our own backgrounds, from finance and legal consulting groups that we work with, in order to create a true partnership. And I think this is where the rubber really meets the road when it comes to reforming venture capital. Is the old school way of investing equitable? And I think the answer to that is no. And so it's made me really think, how can I continue to be a VC, but do it in a more equitable way? How can I come to the table with a dynamic that goes beyond, I have the money, you are the company, I have the power, and you will do what I say? And so that's what we've tried to do and what we've tried to build with our 12-year track record at Beyond Capital. To give you some impact numbers, they are not small. Our 14 investments have reached more than 20 million people with a disproportionate impact on women. We've had 3 exits, top quartile venture returns in the portfolio as well. We know that every dollar we invest impacts the lives of more than 37 individuals. And we're really proud of our accomplishments. Our track record also means that we've spent the last decade building relationships with over 100 co-investors, accelerators, incubators, and other sourcing partners. So on the heels of this track record, I've actually recently launched our second fund, Beyond Capital Ventures. We're really looking to take our strategy to scale. When we apply our number of every dollar we invest impacts 37 lives at a $30 million fund, we're looking at touching beyond 600 million lives with the portfolio that we are investing in. But as I mentioned previously, despite all this progress, the power dynamics in venture continue to play out in familiar ways. VCs claim to be founder friendly, but then they use the familiar extractive VC playbook. Founders find themselves heavily diluted. Investors focus primarily on their own return rather than the long-term success of business, not to mention the selection bias when it comes to funding local founders on the continent. And I hosted a session on that at the Songkub Forum earlier this year. In the case of emerging markets, 70% of investors are headquartered outside of the African continent, and therefore they take profits out of the region, which is something I am committed as an American citizen not to do with my gains from this fund. So how can we as investors really combat this dynamic? How can we reform venture capital and offer more genuine and authentic support beyond just writing a check? How can we make sure that all the wealth generated by African businesses does not leave the continent? Again, my family has roots here too. I'm really passionate about this. So this year, I also published my first book, The Good Your Money Can Do. And throughout my journey as an impact investor, I've learned that many people have good intentions, but they don't always take the time to examine their attitude towards money. And I think this is a good starting point, actually. It actually comes from us as individuals and what our values are. And as I wrote in the book, think of conscious investing, think of impact investing, or basically think of investing with any sort of intention to have impact, ESG, whatever you may call it, not just as asking more of your money, but really asking more of yourself. I also like to say that the secret sauce to impact investing for us is called conscious leadership. Really, it's entrepreneurs thinking about all stakeholders. It's us as investors thinking about all stakeholders. Because we know at the end of the day, we're investing in people. So we are seeking out conscious leaders who are thinking about all stakeholders as a critical part of our investment strategy. In fact, we assess leaders for this. And when I'm looking through pipeline opportunities, I believe the conscious leaders are creating opportunities that leaders who are simply thinking about financial bottom line alone are not. But it is important to go beyond the investment strategy. It is important to go beyond what we're measuring. It is important to go beyond the portfolio companies. Let's not start from metrics and then manage everything to that. So we thought about our fund structure. That was our second question. Are we really thinking holistically? Are we really walking the talk as impact investors? Here's the deal. When I left Wall Street, venture capital made me feel uncomfortable. It made me feel excluded as a female in the culture. And there was something not right about how historically it has not been set up to work for everyone. So I think as a group, we're here to change that. We care about investing in a region where there's tremendous opportunity, where there's strong growth, but it's pretty much overlooked by many parts of the world. I think also there are many women, there are many people of color, and other groups in venture that are truly left out. And so in Africa in particular, I've really observed this kind of ongoing barriers to also raising capital for my own fund, and the difficulty of aligning expectations between the realities of startups and the companies that we're investing in, the potential that they have, and the expectations of investors who view our work as international or too risky. So while the landscape is changing, I do think, again, there's a need for more structural change. And we need to also educate and create an ecosystem around more local investors, local startups. And hopefully, local startups are not relying too much on foreign capital, which can be extractive. And this is why the time is now to reimagine venture capital. It's driving the major growth of our economy, yet not everyone is being given a fair chance and an equal seat at the table. Since its inception, the venture capital business model has been a grim example of capitalism-fueled power dynamics. I'm sorry if you're a VC. I think deep down, you probably know this already. And I know that you love the work that you do, but it is true that with money comes power. And as impact investors, as investors that are investing on a continent that has this incredible potential for marriage of impact and financial return, we should care about reforming venture capital. We should care about how we invest. So what we're doing at BCV, let me make this actionable for you, is we are employing Equitable Venture, a strategy that will help level the playing field in that power dynamic that I'm talking about between investor and the founders. With Equitable Venture, a fund shares a portion of its profits with the founders in which they've invested. So essentially what we're doing is we're giving every founder in the portfolio a percentage of the profit share GP carry in our fund. We view the founders essentially as potential co-owners in our fund. We almost view them as venture partners in our fund. And we plan to share the upside of our fund with them by giving them this GP carry. We recognize that ultimately entrepreneurs do work much harder than venture capitalists. I admit that. So by offering a stake in our fund, we are recognizing those efforts. We've also built in incentives, in our case, we call it a gender bonus for founders in their companies to promote and attract women to management positions and implement gender positive policies. They will get 100% more of this carry stake if they have gender positive policies and women on their management team and meet other milestones around gender. Our entire strategy is centered around investing in the conscious leaders who are driving innovation around need to haves. We are also aiming to be conscious leaders ourselves. And this is why Equitable Venture is a part of our commitment to being holistic impact investors. And I encourage you to think about how can you structurally change some of the way that you invest to be more equitable, to actually move towards ownership amongst founders on the continent, to move towards additional and not extractive investing. So I really encourage you all to take a second to really think about these power dynamics. How do you relate to the founders you invest in? Do you see them as partners? Do you see them as somewhat a piece of your success? This is just another tool to kind of alter the very structure of a venture capital vehicle. What else could you do? Let's talk about that. You can focus on challenging your own implicit biases, start incorporating equity and inclusion into your core values, and innovate on your deal sourcing or hiring. If you keep doing what you've always done, the results won't be any different. Try to focus on more than just surface level indicators of success, like board or CEO representation, or where somebody went to school. And avoid this check the box mentality. It's really not fun to check boxes. It's more fun to get to know the people, get to know the businesses, and know that you are working in true partnership. If you're an entrepreneur, you can also think about how you can demonstrate your conscious leadership skills, how you can educate your investors that this is a skill, that this is a toolbox that is relevant and that can drive profit. So think about adding a gender or racial equity questionnaire as a part of your due diligence, whether if you're a founder on your suppliers or your customers, or your, kind of even on your investors. And if you're an investor, that's a very easy thing to do. As someone who funds businesses that have tremendous impact and financial potential, Equitable Venture surely enables our fund to live that paradigm, to really understand and know and institutionalize the fact that we are committed to more than just financial return. We're funding people, we're creating communities, we're creating networks, and we are proving that we're all in this together. So now I ask you, what action will you take to become a more conscious investor and a more conscious leader? How will you reform venture capital with me today? I would love to hear from you. You can get in touch with me at eva@beyondcapitalventures.com or on LinkedIn. Thank you so much for your time.